I am currently in this USD JPY long trade. This trade is running nice in profits, and I will show you in this video how I analyze the markets and simply explain my strategy, how I trade. So first at all, I trade with fundamental analysis and technical analysis. Before I take a trade, I make the fundamental analysis. That means I look at COT, valuation, and seasonality. I will also explain you what that is. If I see something interesting from a fundamental perspective, then I go over to the technical analysis. I will look for supply and demand zones. I will now take this trade as an example to explain you how I analyzed. First of all of this I learned at the online trading campus from Bernd Skoropinski, and all the indicators I will show you here in this video I also got from OTC. So to make the fundamental analysis, we analyze the futures, so the Japanese yen in this case. And the first thing I'm doing is checking the COT data. COT means commitment of traders. It is published by the US Commodity Futures Trading Commission and shows the positioning of different types of traders in the futures markets. It gives insights into how commercial traders, non-commercial traders, and small traders are positioned. For example, here you see the retail traders, and as you see, they are extremely bullish. And if you look back here in the past when they were so bullish and now they are even more bullish, look what happened. Retailers are bullish, price drops. And why do I want to trade against the retail traders? It just makes sense because over 90% of all retail traders are wrong. So back in time when we had this huge drop, it was not only that the retailers here were so bullish, we also had the commercials doing the opposite. They were extremely bearish. And yeah, you see what happened. And now look at this. Commercials are even more bearish. This is crazy. And this is also why I will hold this trade for some time, because the fundamentals look so great. So retail traders, I think there's nothing to explain. I think you understand. But the commercials here, what you see, commercials often use futures to hedge real-world business operations, for example, farmers or producers. And we can also call the commercials the smart money. So just by looking at this COT data, it is screaming, or it was screaming for a short, and this is why we took a long in this USD JPY. I mean, shorting the yen means long USD JPY because it's the inverse chart. This was just the COT data. For me, there's also more to look at. The valuation tool, and this is this one. The valuation tool simply shows if an asset is overvalued or undervalued against gold, the yellow line, the US dollar, the purple line, or the treasury bonds, the blue line. In this case, when we went long the USD JPY, the Japanese yen was overvalued, as you can see here, compared to the US dollar and treasury bonds. So this is a very good sign and a confluence that it's time to short. On top of this, it was also the seasonality that gave me confluence. The seasonality in this time when we went short the Japanese yen or long the USD JPY, the seasonality was showing that it is clearly the right direction. So now we made the fundamental analysis, but this doesn't mean that we can just place a trade. And here comes the technical analysis, supply and demand. So the first trade, you see, this was a sniper entry, and I have to say shout out to Bernd because he was calling that demand zone. This was a 16-hour demand zone and probably covered by weekly demand. I will show you an example better in the euro because there it is more clear, but also here I can show you. That was the first trade. I also took a re-entry just for a challenge, not for funded accounts. So re-entries I really just do on challenges to pass the challenge faster. Very simple. You see here the 4-hour demand zone hit, boom. Yeah, but let me show you an example in the euro. So I will go to the euro future because here we also have a short, and I think it was this zone right here. So as you can see, we have a drop-based drop, and this is our supply zone. Yeah, Not complicated, very simple. Weekly supply zone. Let's see. Boom. Hit the level and we are melting down so far. So this could look like this. 33% stop loss rule means stop loss here like this. Short position would be here and we are good to go. Yeah. And that's pretty much it. So this is, for example, how we time the euro and the USD JPY, both running very nice in profits. And this is how I analyze. And I think it makes pretty much sense to analyze fundamentally to see how is the smart money positioned and the retailers, because then if we see the COT data, we can position ourselves with the smart money and against the retail traders. And I really have to say this is a game changer to understand the COT data and also include valuation and seasonality in your analysis. You are so good to go. And then you just have to find good, high quality supply and demand zones to enter the trade, to time the trade. And then you have a trade like this. I hope you found this breakdown helpful and gained some valuable insights. If you did, don't forget to leave a like, subscribe to the channel down below. If you have questions, drop a comment and I would love to hear your thoughts. Shout out to Bernd Skorupinski, shout out to the Online Trading Campus. Happy and safe trading.